Hi, Warriors. Good turnaround Tuesday to everybody. The dollar is trying to recover, put in a higher low, which I'm expecting. But, I've been talking to a lot of traders. So if you've been having a difficult time, you're not alone, especially if you're a swing and position trader. Hard to get a market to move 3 days in the same direction. So it makes it difficult to be a position trader. So guerrilla warfare is probably still the name of the game, although I am looking for some positions, and I'll go over the S&Ps in just about a second. So we'll see that, and let's get to the dollar. So here's silver headed for 34 or better, probably challenges high, and while that's happening, gold struggling. You look at the XAU, the gold silver ratio. And there is a possibility that we could get one more drive for a third, but this definitely is kind of looking like we're just correcting this big slam. Whether it does or not, I'd welcome it. I still think you exchange some of your gold for silver at these levels up here because I think sometime later in the year you're going to see it more towards a median, which is going to be 60, 50. I remember 40. So, I'm looking for silver to way outperform, and this is, I believe, the beginning of it. And if there is one more pass at 106, that's going to be an additional opportunity to repeat, rinse and repeat. All right, so let's look at euro, which we're short from last week at 1480. It's really done nothing. Tried to pop out of this range. Tough to make too much out of it. For us to get downside follow through, we still need action back under 113. I think it's possible, but we could still, like I said before, have some type of right shoulder, which would be equivalent to the left, which would be at 1470. But I'm not getting the kind of feeling like I'm missing anything, not being short the dollar right now. Here is the dollar. It's trying to turn. Um, 99 would be a good sign if we could close back over 99. That could generate the next move back towards par 50, par 80 to 1.5. That's what I'm looking for. And this is just a reaction in the dollar. It's not the final low. Look at these RSI readings. So, I'm open to that. It could also just flush and give us a three drive to buy, similar to what's happening in Canada. We had the elections and Carney won. We didn't get the three drives, so I put out a buy yesterday, right around here, 38.40, risking 100. We'll see if they go for these lows. If they do, it will not be confirmed. And if my stop is not elected, I'll add to it. If it is elected, I'll use the fourth P of persistence to buy because I still think there's something counter trend in Canada that could develop up until could possibly trade 141 again. Here's the dollar, like I said, same scenario where we're putting in a higher low, well low, off the low here, and closing over 99 is going to generate that. So again, we have gold lower, silver up 30 cents. The gold, silver, here's gold down 28. Maybe it could rally to 3,400. I think this high has a pretty good probability of being a high, multi-month high for a correction. I'm looking for 2,700. So I know it sounds pretty aggressive from here, but it was an aggressive move. I just did an interview with the guy from barchart.com, showed the seasonals have a tendency to top in April in gold and then just work sideways to lower into the summer before the next advance. So I think that's possible there in the gold. And then one silver, a lot of people are saying, Dale, do you still think we're going to get 27, 26? And I don't. I think that we're going to complete this first wave over here, may go for this level up here at 34.60. And then I'd be looking for pullbacks to 31, maybe 30 during this time frame, and the gold, while the gold continues lower. Want to take a look at what's happening here in um, yields. They're kind of being pressured lower here. I don't see anything that's going to flip it. We do have, I think the big number is going to be the NFP on Friday. Um, I I did buy some October puts in the bonds right here, thinking that this straight line move is just setting up a flag. So what the most bearish thing it could do, and here we are only Tuesday, we've had a couple of inside weeks in the bonds. So how we finish this week is going to be pretty important. And here's your weekly. So I think this was intervention by the Fed down here at 85 again. Then the next week we had a inside week followed by a bullish week, outside week up, but still inside of this range. So if the bonds could turn down and start heading back down towards those lows, that would be a problem. I bought Octobers and 80s, so I need a breakdown under 85 for them to work. It's kind of like my edge for perhaps the government having a hard time getting budgets, rolling over debt. A lot of people are long bonds. You'll hear people that are afraid of the stock market right now. Oh, we're much more longer bonds and stocks, so they don't feel silly uh, talking about being long for that last 20% decline or bigger. But I look at this and yeah, it's either a real long base for a huge move, but have they done anything? I mean, the 20% sell-off in S&Ps and 30 in NASDAQ, this is all we could get out of it. It really wasn't much, considering the damage done in Mag 7s, etc. So we'll see. I could talk about this all day. It's going to be price that's going to determine whether or not the bonds have bottomed. And I would say closing back over, you know, 91 might be it on a shorter term basis because we still haven't even retraced 50% of that weird decline that we had while the stock market was still down. And here was a graveyard saved by the Fed. We'll see. Halfway back's 89.70, so we're not far from that. 61.8 back, 90.78. But if I just covered it up and looked at this formation, um, call it 94, call it 10. Okay. So if we eventually break down under, it's starting to look like a flag. It's a pretty big flag, but back under 86 and a half. And this was 9 right here, is going to take you into new low ground under 80. More towards 77 would be the target on that. That would take you not quite back to these lows. Oh, yeah, right there, 77. Okay, so it would set up a retest of the lows here. Taking a look at WTI, I know it hasn't done anything and they're still negotiating and it is moving sideways to lower. So we'll see. I think this is a pretty good test, but I mean, it's correcting its overbought condition by basically just moving sideways. So we're about $3 off the high after a $10 rally. Maybe this is just an ABC to some fib level, and then we get another wave. Should we penetrate above these highs with this moving average coming down towards 64, almost 65, close to this, what was this high? Yeah, about 20 points above this high. This is going to set up a rally to 75 because this was almost, well, it was, it's over 10. So if we crack through here, that's going to take you back up here. I still say you buy breaks in energy. I'm not looking for 40 now. Taking a look at S&Ps. They're just grinding up here. It doesn't feel like I need to be in a hurry to short. We're not quite at 61.8 levels. And I have a lot of stuff up around 5680 to 5800 up here. Maybe we could trade 760. Uh, that would be between the 61.8 and the 78.6, which is up at 860. I'm not expecting that. And I think that this part of this recovery is on borrowed time into the end of the week, at the most early next week. And I do think that we're going to shake the trees one more time and take it out. And, the other option is this was the low and we're blowing the new highs. But there are a couple of Elliott options that say this is a 4, which implies a 5, which is a new low. And there are other Elliotticians that said this was all of wave 1, and this is ABC for 2, which implies a 3 to the downside as well. So I'm in that camp until proven wrong. And I think that, you have to try it. And again, you don't have to. But again, my major reason, besides this just being a retracement after a big break, is that the retracement began with the low being confirmed. Markets rarely bottom when momentum is confirming price, and that's a pretty low reading, right around 19. So if we went down there again, we diverge. We took it out. So that's what I'm looking for. Sometime June, July. If it happens sooner, that's fine with me too. I think that's going to be a wrap for today. Oh yeah, take a quick look at the ends back at some important support. It's really not doing much from 42. I think I'll just stay uh, with you know my dollar positions. They look okay. I think we're going to get over 68. Um, the pound, that's what I was going to cover. Look at the pound at new highs, diverging. So, the pound could be vulnerable as well since EG looks like it wants, it's a little oversold here and it's right back at some moving average support. And if it looks like, look how oversold it is just by moving sideways. So this looks like it could pop. And if that's the case, the pound's going to be your preferred short if euro pound's going to start to rally. So any new long dollar positions, I would do it here. Stops over the high of the move. So tomorrow I do have an interview. It's a real young guy, and I've read his stuff. Uh, it's actually excellent, and I'm going to ask him what grade he was in when he did his first trade. It's Kurt Altreiter. So be here tomorrow, 10:30 a.m. EST for Kurt, and we'll ask him how he ended up running his own company at such a young age. It's going to be a great. He does like an RIA. He advises private wealth clients. So we'll see what he's telling the rich guys tomorrow. So good hunting. Don't just count your pips, count your blessings, everyone.